Hey everyone, welcome to the show. Today I have with me tokenomics expert Patrick. Patrick is a serial entrepreneur, he's an investor, he's also an advisor, somebody that is really valuable in the Web3 community that knows his stuff when it comes to tokenomics. And we're at a period in the current market where people are starting to look at different projects. Some of them are maybe a little bit more risky. And so, how do you actually assess the level of risk and the level of quality? So, that's one side that we're going to unpack today. The other aspect of this is if you're a builder and you're building in Web3, how do you set up the proper tokenomics? There's so much that goes into it, and there are companies out there that do this for a living, and you have to pay a lot of money to get this done. But on this channel, we're going to talk to Patrick, and he's going to take us step by step with some of these projects, and we're going to unpack some of this. We're doing this for the first time. We haven't done this before. So this is a trial run for us. But make sure to like this video, subscribe to the channel to show some support for Patrick. And if you have any questions or any specific projects in mind that you want us to dissect, feel free to drop that in the questions in the comments section. So with that in mind, Patrick, welcome to the show.
It's a pleasure to see you again, and it will be fun to talk about tokenomics. It's one of my favorite subjects to discuss.
Yeah, there's so much that goes into it, math and supply, demand, a lot of things, right? So
Yeah.
there's going to be a certain level of expertise on this channel. Some people are going to be more well versed in this topic, some less. But let's talk about just the overall market for a second here. Obviously, with the recent news of spot Bitcoin ETF, those rumors are starting to sizzle, and for that reason, it's causing the market to go up. There's also Ripple case is in the news right now. They're looking to get past their whole SEC case, and Ethereum today, out of nowhere, just decided to. I'm not going to say explode, but definitely some price action there. I mean,
Oh,
why do
it's not.
you?
Yeah, it's not out of nowhere. It's the BlackRock filed for ETF of Ethereum yesterday.
Did they? Okay, because I didn't see that news. I thought that when it comes to the Ethereum ETF, we're still far away. I mean, first we got to get to the Bitcoin, but
Yeah,
there you go. That's why I have you on the channel to set me straight with when it comes to my facts. Um,
yeah.
so
Maybe it's fake news. Who knows? We'll I guess see soon. But yeah, that's what triggered the price to jump yesterday.
yeah, look, I mean, we're definitely no strangers to fake news. That happens all the time. Um, so with that in mind, I wanted to look at one of these listing sites like CoinMarketCap and CoinGecko and look at some of the more trending projects and start with the basics. Like, for instance, I know that XRP right now is trending. Solana is doing really well. Chainlink is doing really well. Are any of these three something that you've like dissected a little bit more in terms of like how their tokenomics is structured?
Yeah, I can share my screen a little bit. That's in layer ones. They are very different in terms of how the tokenomic is structured compared to most decentralized apps. Um, I think if we take a look at Solana, that's thing, most of those project, like new emission of token, is done through mining, whether it's proof of work or proof of stake. So, but if you go on their light paper, for example, typically speaking, there's some of those layer ones never had the pre-sale, so that makes things in terms of tokenomic very different than decentralized app that had a pre-sale with vesting and all of those things. So usually you can go to the white paper and search for tokenomic, and that's the thing. Layer ones, they have a typically that you mine a new kind of token for providing proof of work of proof of stake. Um, and usually it's described in a certain way that is more mathematical. And the important thing here is that it's about market adoption. So Bitcoin, they took a conscious choice to focus a little bit more on the scarcity aspect and fixing, like the price is fixed by laws of supply and demand, like a macroeconomics theory. And this thing, Bitcoin wanted to work more on the supply side by restricting how much new supply would be emitted on the market. Meanwhile, Ethereum, they are more focused on the demand side of the equation because you can mint new Ethereum and you can destroy like Ethereum token with burning, but it's really market adoption based on the all of the decentralized app that build on top of Ethereum that drive adoption and basically push the demand curve to the right. Uh, but in all those cases, there was no kind of pre-sell necessarily of token to investors and early adopter before they launched on the market. And early on, there was no listing on exchanges. So the only way to get the token was to trade with someone else that had some, or to mine it by providing a useful like proof of stake or proof of work to the network itself. So the thing it's a very different way to analyze tokenomic for in their case because it
So is
has
it
to
safe
do
to
more.
say, Patrick, that when it comes to proof of work, you're actually working for to earn those tokens, and in the case of proof of stake, I mean, there's usually an ICO involved.
Yeah.
You mint a certain supply, you sell that supply, and that's typically the one of the differences between proof of work and proof of stake.
Yeah, and I think like so here I was able to search for the Solana tokenomics, and I was wrong. There was some pre-sale in this particular case. So you see there was 25%, 25.6% in seed sale. Uh, there was a funding sale of 20.4%. There was a public auction, strategic sale, validator sale, and the team and foundation. So in this case, the team and foundation together, they have 40% of the supply. But Solana has been on the market for quite a bit of time, and as you see here, that's the vesting. That's the usually I'm concerned when I see you see the here like that was back in 2020. There was a massive spike of vesting that occurred on a specific day. So this usually this concerned me a lot. But in the case of Solana, that's in the past, so we don't worry at this point about this
And
anymore.
again, for those that may not be as familiar with when it comes to vesting, essentially it's a period of uh, I guess allocating your tokens to shareholders, right? To your investors, basically.
Yeah, they become available for them to trade on the market.
Right.
So the thing, so when you see huge spike like this that went from very little to a large amount, and that means that all of those users who get their token because they bought into the seed and the funding sale and all of those various sales, and they bought at lower price, they may actually cash in and sell the token for profit at that point. So if you're someone who want to buy at this exact date, that could be very scary when you see that so many people have the availability to sell their token at that point.
So for a
You,
brand new project, that may be a red flag, but being that Solana has been in the market for quite some time, maybe not so much here, right?
exactly. At this point, you see that there's some release of vesting that occur on a constant linear basis, but at this point in time, I think the market adoption is increasing faster than that kind of unlock. So,
Mhm.
and actually, at this point, I Yeah, it looks like all the vesting has been done. The green aspect is the staking reward. So that's for the miners that stake to secure the network. So it's thing to me that doesn't really concern me that much because it's really market adoption at this point that matters. And I think Solana has like recently got a partnership with Visa, and there's lots of institutional players that are kind of collaborating and partnering with Solana. So it's definitely a project that I'm not personally concerned about this release schedule on the token.
There was a lot of concern in terms of a lot of VC money in there. Is all are we past that after the whole FTX situation? Like, do you feel like we've kind of got detoxed, so to speak?
To a certain extent, so I think when FTX collapsed, the creditors they had a large amount of Solana token, and the liquidator that manage the selling of those tokens is actually pretty good at not flooding the market. So they have a pretty big concern to make sure that it's sold in a way that is manageable and will not crush the price. So far they've been pretty good at doing that correctly. So again, I to me it's not much of a concern at this point. Have you seen the price of Solana in the last few days? It's skyrocketed. Even yesterday, another almost nearly 6%. But in the last month, it really recovered quite a lot. It more than doubled in a month. So
Yeah, it's I was talking to Max about this. I had him on the podcast and we were talking about how incredible it is for Solana to be so resilient. You know, it's gone through so many different crashes and you know, a lot of people were saying that, well, you know, it's a startup, right? It was going through its growing pains, and you know, in some ways, maybe it's further than some of the other chains that haven't gone through those growing pains yet. Obviously, Cosmos is another one that had their share of problems, you know, specifically last year with Terra Luna. But yeah, it's very interesting, and now there's just so much momentum after the AWS partnership as well. So Solana is very interesting in terms of you know where it could go during the next bull run. Yeah. Do you
exactly.
have any red flags from tokenomics perspective or any other perspective when it comes to Solana?
Not exactly. It's just if I was a very early adopters, then I would take a deeper look at the vesting schedule. But the thing, as you see, the seed sale was at 4 cents, and the funding sale was at 20 cents. So that is a 5x in a matter of just a few months.
Hmm.
So usually when I see that, it concerned me because that means that when the seed investors have the ability to sell, they are not even on the public market yet, and they had a 5 times return on their investment. So they could cash in profit. The likelihood of cashing in profit increase with the more return you get, and that was not even on the public sale itself. The
Now,
public sale,
unless their vesting schedule shows that that their tokens are still locked, right? That's I
exactly.
guess the only okay,
So,
understood.
the thing, because this one has been on the market for so long, the concern has dissipated quite a lot. But we can look at like a here on CoinGecko. I went to the gainers and losers for the last 24 hours. Let's.
Yeah,
I don't know what
Ordi
this
is.
badger is. Which
I was
one?
just looking at Ordi because that one's been trending. I guess that's a Bitcoin ordinal, I believe.
Yeah,
Are they different when it comes to tokenomics or same deal?
I have never looked at their project, and let's see. I don't know. Yeah, there's. typically speaking, there's a website. In this case, I cannot even see the website.
Yeah,
Uh,
it's difficult to
and
evaluate when you can't even look at the website.
and I think because in this case it's NFTs, but uh, I don't know if ORDI is a token related to the ordinals, which is the NFT thing themselves. So I'm not too familiar with that stuff. I kind of stay away from NFT for the most part. But maybe we can look at another project here. Let's take a look at Badger. I suspect it's probably a meme coin, so maybe it would be.
Yeah, I don't know how much. I mean, how much does I guess tokenomics applies to meme coins as well, right? It's no different.
Yeah, to a certain extent, yeah. So in this case, it goes straight. I'm not even sure if there will be a tokenomic document. I think one of the things that concern me a lot usually it's when early investors had a massive growth spike in a short time, and then they get unlock at TGE itself. Usually, I wait for the dust to settle because if the selling pressure is really potentially high, like it's not clear that people will sell or not, but if they do, and then the buying volume is not there, typically speaking, the liquidity pool, if it's a decentralized exchange, is so small that it often cannot really absorb too much token unlock on the TGE itself. So
Mhm.
to me, that's a kind of a big concern usually.
How much of that is just market makers manipulating and trying to create hype that's not really
Yeah.
there?
On centralized exchange, that's the majority. There's honestly a lot of wash trading to just create volume and all that stuff. So I had one bad experience with launching a token on a centralized exchange as the IEO. I'm not sure I'll redo that again, to be honest, unless it's done on a top tier exchange. I would prefer to do it on a decentralized exchange because in this case, the market maker is automated. It's a AMM
Mhm.
in most cases. So you don't have a market maker that manipulate the price on top of it. It could, but I would say that it's at least the bonding curve itself that manage the price action. So I find this a bit more safe in a sense.
Mhm.
So here, okay, there's a white paper for that one. So I'm not sure what is Corgi. Let's take a quick look. So typically speaking, I look at the concept of what the token is about to see if there's a real utility to attract real users. Because that's the one thing I'm always concerned about is will the token be used only by speculators or by real users? And what it would be the proportion between the two. So okay, so it's something related to AI and social media, I suspect.
Yeah. And I'm just going to preface that none of this is, of course, investment advice. We have no idea if these tokens are potentially scams or not. We're literally just scouring through CoinMarketCap and trying to assess the tokenomics and understand, what are the pros, what are the cons. In that way, you as the listener and the viewer can use this to empower yourself to make the best decisions when it comes to what you're building or potentially what you're investing in.
Yeah. So what I'm looking at there is, to me, it doesn't really attract me to be honest. It's more meme coin and they slap like a keyword for AI on it. Uh, I think
Yeah.
if you're doing a AI project in crypto, but you don't have any people who have PhDs or some real AI chops, I probably it's just a keyword and nothing concrete. So,
Yeah.
but let's
Bittensor, if I'm pronouncing that correctly, is actually on the other side of the spectrum, right? I mean, they are in blockchain, but what they're building is like real utility, and especially with regulatory concerns around AI, the whole concept of decentralized chat GPT. I mean, it sounds interesting. And also, I don't know how
which
much. research you've done into what Elon Musk is building, but he's also supposedly coming out with his own version.
And which project did you say it was?
Oh, the Web3 project that I was referring to, Bittensor,
Yeah.
Bittensor,
Oh,
B-
BitTensor. Yeah, yeah, yeah. That one
Bittensor.
I
Yes,
really
thank
like.
you.
Yes.
Yeah, yeah. The
Yeah, yeah.
concept is interesting, right? So it's instead of getting like a centralized source of information like you do in Chat GPT, you get it from multiple different sources, right? And I'm not sure if they come together first to align, and then provide you with the final piece of information, or if you receive multiple different sources. But just the concept of decentralizing um, that information, I think, is interesting, especially with the regulatory concerns. Biden is talking about coming out with certain regulations around AI.
Yeah. Uh, yeah. To me, what attracted me to BitTensor is that if you're building AI model in a decentralized fashion, for example, like Singularity Net and uh, and things like that,
Mhm.
the it's you cannot reuse your model that you built into like a TensorFlow or or all the other framework of AI technology. So you have to recode everything on the way it works, let's say in SingularityNet. So BitTensor enable you to use your existing model that you do in a normal Web 2 environment, and you can run it on the blockchain without changing the code base because it's I think they made it so that your existing code of AI can run directly in and migrated to with their technology. So that's to me the part that I find most interesting.
Is that something that we can go into a little bit further when it comes to their tokenomics?
Yeah, let's take a look. Because right now I'm looking at the core G stuff, and there's not much to see. There's two categories here, like community management and liquidity management. And I think
Yeah.
it's not super clear how those things will be managed based on just this alone, that one page of information. There's no mention of vesting or any of that stuff, so I just don't really know. So bit tensor. So the thing, I like the project, but I forgot if I looked at their white paper, the tokenomics before. So we can take a quick look.
So the first thing that you do when you want to educate yourself about whether or not to invest in a specific project is you click on their white paper and you do a little bit of research, right? That's typically the first thing that you do.
But the first thing is to make sure what the concept is about. Are they solving a real pain for some group of users?
Mhm.
I take a quick look at the team. Is it anonymous, or they have real expertise for the problem they're trying to solve? And then I would take a look at the white paper, specifically on the tokenomic. What would be the next area? Yeah, I think I'm afraid this one doesn't have either a pre-sell or a typical. It might look a bit more like a layer one. So typically for
Yeah.
stuff like that, the tokenomic itself, I'm not usually too concerned. Let's see if, because at the end of the day, it's more about the the market adoption. So as long as they're solving a real problem and there'll be real users instead of just pure speculators. So yeah, so they don't have a fixed supply, so they are not like Bitcoin. This seems that Or yeah, maybe they actually do have a fixed supply. And right now there's about, yeah, a quarter that has been put in circulation already.
Hmm.
Yeah, like it. Okay, so it is a fixed supply like Bitcoin, and I think that there's 75%, 73% that still has to be emitted. So that means that depending on how fast that hit the market, yeah, here. Oh, they're using a halving mechanism like Bitcoin also.
I guess the biggest difference here between Bitcoin, well, there's a lot of them, but in terms of supply, 93% of Bitcoin has already been mined. It's my understanding. I believe we only have like 7% left.
That's right.
But in this case, it's obviously a lot more because this is a much newer project.
Yeah, and I think if you look at their fully diluted market cap, it's 700 million. Did Here CoinGecko didn't put the circulating market cap, but it's about 25% of that. And I I I don't know if they have real paying customer at the moment, but based on the technology, and because I know some people on in their team, I know they have the strength to really build what they're doing. So this release schedule like here between, we're in 2023 right now.
Mhm.
It's until the kind of end of 2025. You're gonna have a release that is, what is this number? I cannot really see, but it's kind of doubling the amount of token in circulation. But as long as demand is doing more than doubling, then the price would increase, technically speaking.
Mhm.
But if the demand and the market adoption is below this release schedule, that's when the token price could actually go down. It also depends how they're gonna manage with market making their uh, their liquidities.
So
And I
is it
think
also, is it meant to be deflationary? Like, so they have this halving. Is it meant to cut the inflation in half?
yeah, that's thing. So every 4 years in this case, they will have. Is it 4 years? Yeah, looks like it. Yeah, 4 years. The release schedule will halve. So that means that over time, if market adoption keep growing, the real like return on investment will come later in the life cycle, in theory.
So they haven't had a halving yet, right? Their first one is coming up in 2025.
That Yeah, that is correct. Yeah.
Okay,
But I
interesting.
think it's still very early in the phase of the project. And I think they do something very different compared to Singularity Net that is attractive to AI developers because they can reuse their code that they already wrote on TensorFlow and all that stuff.
Hmm.
So I think it should bring a lot of AI expert to be interested to maybe build and deploy their models in a decentralized fashion. So that's why I find this aspect really interesting because if you're an AI developer and you want to build a model on SingularityNet, you kind of have to code it from scratch. And then you don't even know if you'll get real paying customers. So may as well just write with the standard practice in the industry on TensorFlow or other framework of AI development, and then deploy it on AWS or like the Google Cloud and all that stuff, so that because you just want market adoption with your customers. The thing, if crypto and the blockchain doesn't bring you real customers and it's only speculators on your token price, it's not going to be sustainable in the long run. So I think BitTensor have the ability to bring real AI expert because they are not duplicating their effort and building something for basically no users when they could do it on AWS and bring more users. If that
Hmm.
makes sense, it's the thing. It's kind of a marketplace. You need both sides. You need demand and supply come at the right time to grow. But thing, so the thing in this case, if they can bring the AI developers, then the next step is just to bring real customers to want to consume those AI model and the utility they provide.
And in terms of the applications, I mean, it's just like any other chain, right? That wants to be able to utilize AI, meaning applications that want
Yeah.
to be able to leverage decentralized AI would essentially gravitate towards a chain like Bittensor.
Yeah. Uh, so training models, when you're talking about AI, okay, now we're no longer talking about tokenomics, but uh, so the costly part of building AI technologies, first you need the data in large amount. Then you have to train your model. That's the costly part. And if you do it on a cloud architecture like AWS, a lot of the cost go there. So
Mhm.
like it could take you a week or of computation to train your model, or maybe even longer. So that's really costly in terms of computation. So if you're able to deploy this into a decentralized architecture like this, and it can be parallelized, maybe you can actually do this a lot cheaper than paying a lot of money to AWS and Amazon. And then whoever run the node of BitTensor are the one who collect a portion of the fee. So render is kind of like that too. Like if you're doing like heavy computer graphic, like rendering 3D scenes and stuff like that. So
Mhm.
render, that's basically what they do. It enable you to kind of render and compute what normally you do on a GPU on a cloud architecture, but you do it in a decentralized architecture that is cheaper. So they are able to bring real customers for that because it's cheaper in this case.
Yeah, I mean, there's a lot of projects that are going after AWS, and I was actually talking
Yeah.
to Gawa today, and they're coming out with Gawa Chain, and they have over like 30,000 founders nodes,
Yeah.
and they were talking about how you can leverage that and essentially kind of do away without having to pay for cloud services, because especially for startups, that's a very large cost to have to eat.
Yeah, that thing it's a lot cheaper to buy your own machine, but then you cannot scale as well because when the model has been trained and you just host it on a cloud architecture to service your users, the cost of that is not as much as the training itself. So you
Mhm.
can do the training here. In this case, BitTensor, I'm not sure on the specific. I think you can train, and I think you can then service your users from the architecture itself. But the thing, AWS or cloud architecture for stuff like that is really not cheap. Like it's much cheaper to buy your own machine, but then it's like there's capital investment if you're a young startup, and it doesn't scale if you keep uh, building models that are more and more complex. You need the scalability, and you don't want to pay for all the infrastructure. Um, so
Good.
I think
Transitioning a
overall
little bit,
that's
Patrick.
it's yeah, yeah, yeah. Let's
No,
do that.
no, go ahead and finish.
But I was just gonna say that to me, I'm interested in BitTensor, and I'll probably make an investment. I think I missed the pump of this week because they announced. But I don't know if they announced anything. But I know they like a few days ago. Yeah, I think it nearly doubled in the last 7 days. So
Yeah, well, I think right now everything is moving up, right? With I
yeah,
mean, if you're in the red right now this week, I don't know, something's really wrong, I feel like. But transitioning a little bit, Patrick, are there any other projects that are kind of on your mind right now, from the perspective of tokenomics? It could be for the good or it could be for the bad. Just
yeah,
anything else that you would like to share?
yeah. But one thing I can mention that something that I pay a lot of attention to is the fully diluted market cap.
Mhm.
Sometime I look at the market cap in circulation, but unless there's a big discrepancy, to me, the fully diluted market cap is the, because I tend to prefer investing for more long term. So I care more about what it's going to be like in, 2 or 5 years. Um, and the thing that, so that means that the fully diluted market cap is when all the token has been put in circulation or close to. How big is that? So right now, BitTensor, it's a good project, but 700 million is not small.
Hmm.
What is the potential that this can grow a lot higher? Let's say that 7 billion, that's a 10x, right? I think 7 billion is definitely possible. Uh, what about 70 billion? So that would be 100x. I think it's also not impossible, just
This bull
because of
market.
AI. But the thing is, if some of the AI, let's say you manage to build a chat GPT on top of BitTensor and it attract 100 million users, obviously the architecture like this, the plumbing, 70 billion, that's really not out of possibility, I would say. So because like Ethereum is at probably close to 300 billion at the moment, I guess, maybe 200 billion. So there's room to grow. That's basically what I'm looking at here when I look at this. Is that at the stage of their project, yes, it's probably overpriced, but at the same time, if it scale, it could happen very quickly. And at that point, I really think it's entirely in the possibility that it could be 7 billion or more.
Mm,
So that's one of the big thing I look at beside the vesting and the pre-sale and all that stuff.
interesting.
There's a website we can use to token unlocks. So that's pretty useful to, if you cannot sometime find the tokenomic or it's not displayed correctly, here, you can take a look at that.
Token unlocks.
Yes, token.unlocks.app. And I think right now I'm looking at Sui. It's another layer one that is highly popular, extremely fast. I think even faster than Solana. But the thing, just like Solana, with massive unlock, uh, in this Sui, it is coming in about like in June, July of 2024. So I think at some point between now and then, there could be a pretty big downturn on the price just because this is coming and what the early investors will do. Are they going to cash in their profit or not? Because if you look at SWI, I think the price has grown a lot. So that means that the early investors, depending on what price they bought on, uh, because okay, when you look at CoinGecko, it doesn't tell you the price back when it was in pre-sale. So the people who bought in the pre-sale itself, so they have early contributor, they have Series B, Series A, and then Series A. Yeah, it's saying the Series B and A will unlock at that point in time, part of it at least. And so that's a huge chunk of potential selling pressure if since launch, SWI is up.
See, this is very interesting to me because most of the stuff out there, they talk about from a technology perspective, which is very important. They talk about from a technical analysis perspective, which is very important. But I don't see a lot of content out there that talks about the tokenomics, right? Talking about vesting schedules. When is there an opportunity for a token to potentially dump? A lot of people are not really discussing that. So this is a very good perspective, Patrick. I appreciate it. And for those watching, hit that like button, comment, let Patrick know how he's doing. Personally, I think this is amazing. This is very valuable information. So it doesn't matter the project, how reputable it is. It's always good to do your own homework. So this is good information. Patrick, where can people learn more about you and get in touch if they have any specific questions? whether from like an investment perspective or perhaps maybe they're builders themselves and they need help with their tokenomics.
Yeah, so they can come to my Twitter. That's Crypto Rookies. I'm typing it right now.
Okay.
Uh, their Twitter. Otherwise, my Medium. It's also cryptorookies.medium.com. Uh, Otherwise, they can look up my real name, Patrick Poirier, on LinkedIn. I think we can just put a bunch of link in the description of the video, and then
Absolutely.
people can go there to find it.
Yep.
Uh, and
Uh,
yeah, I can kind of right now the thing I'm helping on designing tokenomic that is sustainable and that is optimized to do market making in a way that protect the token economy, because that's what most projects don't do, is that they don't really protect themselves. And if they use an external market maker that is there to make money for their own investors, they are not there to protect your token. They may actually give you investment and all that stuff, but they bleed your project uh, of revenue. And if you were to do market making yourself, that's a revenue stream that you can use. But based on all of those fluctuations, you can make money on that while making the market more smooth. But the money that you generate there could basically go to you. And that's one of the things I offer now as a service, is that I can redesign the tokenomics to do market making in a way that protect the token, and you get 90% of the profit while I keep 10%. This way, or both of our upside is aligned.
hmm. Maybe we can dive into that next time, and maybe this could be like a weekly thing that we do. Every week, same time, same place. We'll see how that goes. But this has been very interesting for me, Patrick. I appreciate you coming on, and till next time.
Yeah. I think next time we speak, it would be maybe nice if I run through some calculation of decentralized exchange liquidity pool. I've done that recently, and a lot of people don't really know how to compute the bonding curve to see what's the price impact when people buy and sell. But
Yeah.
the thing that it can really cause the equivalent of a bank run, and that's when your price can really crash pretty badly if you don't manage that correctly. So
Hmm. Sounds good. Yeah, we can dive right into that next time on the show. This has been Token Talks. Really enjoyed this, and we'll definitely be doing this again. Thanks a lot for tuning in.